President nominee Chris Perareza. Okay, let's call on President Eddie Galvez to call this meeting to order.
Okay, good afternoon. On behalf of the Rotary Club of Makati, I call this meeting to order.
Right. Now, may we call on Rotarian James Bosch for the invocation. Please all rise and then remain standing for the national anthem, followed by the RC Makati hymn.
Good morning, fellow Rotarians and guests. Let us all put ourselves in the presence of the Lord. In the name of the Father, Son, the Holy Spirit, amen. Dear Lord, we gather today as Rotarians, united in our commitment to service and fellowship. We pray for your guidance, wisdom, and compassion as we conduct our meeting and work together to make a positive impact in our community. May our discussions be fruitful, our decisions be wise, and our actions be inspired by the principles of Rotary service above self. Lord, we know that we are navigating through uncertain times with disasters around us, geopolitical tensions, and corruptions that continue to besiege our nation. Please grant us the clarity to see through these challenges and the strength to respond with integrity and hope. In the spirit of Rotary, we ask for your blessings and guidance. Amen.
Remain standing for the national anthem.
Mga kababayan, ang pambansang awit ng Pilipinas.
Kayang magiliw, dalas ng sinakalan, alam ng puso, sa dikit mo'y buhay. Lupang hinirang, tuyak ka ng magiting, sa mandulupin, di ka pasisigiw, sa nagagang tutok sa simoy at sa langit mong pagaw, ay hinatang tulad, awit sa pagkayang minamahal. Ang isang ng matawad mo'y tagumpay na nag-iindig, ang bituin at araw niya kailan ang may magdidinig. Lumalang araw ng walhaging pagsinta, buhay langit sa piling mo. Ang inigaya ng pagkay mga amin, ang mamatay ng dahil sa'yo. We're the Rotary Club of Makati, and together we stand proud. We are leaders with integrity, always ready to serve humanity, always living by the four-way test, building goodwill and peace along the way. Giving hope to the world, we're the Rotary Club of Makati, prepared to aid our fellow men. As true Rotarians we live to lead. We believe in service above self, and this is why we succeed. We're the Rotary Club of Makati, and together we stand proud. We are leaders with integrity, always ready to serve humanity,
Okay, may I request the non-Rotarians to please take your seats? Non-Rotarians, yeah. All Rotarians, please recite the four-way test with me of the things we think, say, or do. First, is it the truth? Second, is it fair to all concerned? Third, will it build goodwill and better friendships? And fourth, will it be beneficial to all concerned? And our response to that is a resounding, all right, you may now take your seats and continue with your lunch. Let's move on to the next part of our program, which is the acknowledgement of guests and visiting Rotarians. Okay, starting with our dignitaries. We have District Governor Reggie Nolido. Hey! Of course, past District Governor Tony Kila. There's Tony. And for our aunts, we have Ann Rina Colliantes over there. We have a long list of guests, starting with Dr. Selmer Santos, my guest from the FEU Alumni Relations Office, and then Architect KD Velasco and Sister also from FEU Alumni. Good afternoon. We have Dr. Chip Smith, guest of Michael Shu. Did I pronounce the name correctly? Is it Chip? Here? Okay. Mr. Chris Edwards, prospective member. Hi, Chris. This is your second meeting, right? One more. We also have Arlene Orr, District Public Image Chair, District 1120, Southeast England. Welcome. Alessandra Uy, I suppose daughter of Winston? Yeah. All right. John Alexis de la Rosa, also daughter. Yeah. Son-in-law. Ay, sorry. sorry. John Alexis pala. All right. And then Camila Tan. All right. Welcome. Daughter also. Daughter-in-law. Okay. Then UGP Paul Pasete, RC Makati, Cristo Rey. Hello. UGP Sheila Vasquez, RC Makati are nice. UGP Mike Lopez, RC Makati Bel Air. Hello. UGP Dino Dumatol, RC Makati West. Okay. PP Philip Nazareno, is he here? There. Chair of Rotary Homes, President of Rotary Homes. Okay. And then PP Richard Carino, Rotary Homes as well. Carino. PP Reese Balbastro, RC Makati Arnaiz. Okay, and then we have Rotary Club of Makati or Rotaract Club of Makati, PP IJ Zambrano. Secretary Princess Paul. Director John Kirk Grospe. Justin Castillo, volunteer. And Jamaica Valerius, also a volunteer. All right, welcome to the club, everyone. So may I request all RC Makati Rotarians to please stand for the welcome song.
Friends of Rotary, we greet you. All friends of Rotary.
Okay, thank you, fellow Rotarians. Oh, our guest speaker has arrived. Please welcome Attorney Roel Refran of the PSE. Attorney Roel, please join us at the head table. Okay, now let's go to greetings to birthday and wedding anniversary celebrators. Okay, for the birthdays, we have Rotarians Director Michael Shu, November 14. Rotarian Johnny Ang, November 17. Rotarians, we have Joanne Manyalak, November 8. Ellen Binay, November 9. Juice, is it Juicy or Jassy? Juicy Lim, November 12. Marisa Del Rosario, November 14. Then for our wedding anniversaries, we have Rotarian Peter and Ann Elena Coyuto, November 7. We have Andrew and Celine Escaler, November 12. Pipi Ruben and Ann Mimi Valerio, November 12. Pipi Freddy and Jojo Borromeo, November 13. So, you know the drill. Pipi Junjun, DS, and future governor, Louis Asioche, and the real governor, Reggie Nolido. Please serenade our
Okay,
celebrators.
we're not doing this a cappella. Marcy David is here, so we have an accompaniment. Okay.
The real governor.
It is your birthday. Let's celebrate. Important day.
Happy birthday.
We greet you. Dear Happy birthday.
Happy birthday and a happy wedding anniversary.
Kita nyo naman hanggang maubusan ng hininga. Okay. Thank you, Gov. Reggie, future Governor Louis, and PP Junjun. Now let's go to club functions and committee announcement. Gov. Reggie, you have something to announce? Oh, sorry. Go ahead muna.
Just like to remind everyone, no, that the end of November, we're going to have the Zone Institute in Genting Highlands. So for those who are interested to attend the Zone Institute, please join us there. One thing going on right now is that there is an online voting for the best community project of the zone. Actually, of the region, not just the zone, but of the region. So this region covers Taiwan, all of Southeast Asia, of course, including the Philippines. So one of the nominees for best community service project would be our AI Academy. So let's congratulate Eddie for that. And another project from our district is the National Children's Day of Metropolitan Pateros. I'd like to request everyone to please go to the website, go to these two projects. Please like these projects as your vote. Please ask all the employees of all your companies to also go to the website and for them to also like it, because even non-Rotarians can vote. 40% of the score will come from the likes. So we really need you to like all these. So I hope that you can support the projects there. So Again, Genting Highlands at the end of the month. Please join us. At this point, I'd also like to call UGP Sheila Vasquez to announce the second leg of the Governor's Cup.
Okay, thank you, Gov. Rolly.
Thank you, Gov. Reggie. So good afternoon, everyone. I'd like to invite all of you to please join us on the second leg of the Governor's Cup happening on December 5 at the beautiful Mount Malarayat Golf Course in Lipa, Batangas. And we're also looking for your kind generosity. We still need a lot of sponsors. I hope that you can approach me and our CM Bea later if you want to support. Thank you and looking forward to seeing you on the greens.
Okay, thank you. All right. Any other announcements before we call on Gov. Tony? Okay, if there's none, Gov. Tony, the floor is yours for the PHF recognition.
Thank you. Thank you very much, Chris. It's my honor and pleasure to recognize our three Paul Harris Fellows. And can I ask President Eddie to do the pinning? First, I will call on Yaron Ahami for his first Paul Harris Fellow. You stay here, Aaron. Then Director Michael Shu for his second Paul Harris. He gets a stone, sapphire stone. I think it can be pinned in your shoe. Yaron, stay. And then James Bosch for his fifth Paul Harris. He gets 4 blue stone. So we hope there will be more Paul Harris Fellows.
All right, congratulations, Yaron, Director Michael Shu, James. Now you know you don't want to sit next to Gov. Tony, right? Okay. Parang hindi kayo natawa sa joke ko. Let's go to the next part of the program. Thank you, Gov. Tony, for awarding the PHF pins. Let's proceed to the MOA signing and check turnover to the Rotary Homes Foundation. So at this point, ladies and gentlemen, we'll witness the signing of the Memorandum of Agreement and turnover of donation between the Rotary Club of Makati and the Rotary Homes District 3830 Development Foundation, Inc. So may I call on PP John Binta. John is not here. So you will be doing, okay. So who else? Yeah. Okay, so instead of PP John Binta, we'll be calling on PP Philip Nazareno to do the signing on behalf of the Rotary Foundation. And then we also are requesting President Eddie Galvez, who will sign the agreement on behalf of the Rotary Club of Makati. Witnessing this momentous occasion, we also have, who will be the witness for Rotary Foundation? PP Richard Carino will be the witness for the Rotary Foundation. And for the Rotary Club of Makati, we have IPP Kit Harrison and Rotary Homes Project Chair James Bosch for Rotary Club of Makati. We also would like to invite other members of the Rotary Homes to present today to witness the signing turnover. All right, James. Okay. Okay, the agreement being signed is for the Rotary Homes Muntinlupa project, in which the Rotary Club of Makati is the major sponsor. This supports the construction of 12 additional housing units at the settlement area in Barangay Pututan, Muntinlupa City, in partnership with the local government of Muntinlupa, bringing a total donation of, or bringing the total donation to 40 homes. Our club will provide funding of 2.8 million for the construction of single-story houses to help provide permanent homes for deserving families under the Rotary Homes program. Okay, thank you, PP. Thank you, PP Philip, IPP Kit, President Eddie, and everyone participated in the MOA signing. Now let's move on to the next part of our program, which is the President's time. So calling on President Eddie Galvez.
Okay, good afternoon, everybody. Thank you for being here. I'm glad to get my voice back so I don't have to use my voice double, Louis Asioche. Salamat for filling in last week. Anyway, welcome to our first gathering for November. It's hard to believe we are already entering the last 2 months of the year. So yung mga kaklase ko dyan na UGP, ilang buwan na lang tayo. December na. The time has moved swiftly, and yet when we look back, we can proudly say we've been purposeful and productive every step of the way. Thank you for your energy, your commitment, and your presence throughout the first 4 months of this Rotary year. Before we continue, let's take a moment to relive the highlights of an inspiring October through this video. No?
October was a month where the Rotary Club of Makati proved once again that service and fellowship go hand in hand, where meaningful impact met joyful moments shared among friends. We opened the month with a club-wide fellowship on October 4, hosted by Rotarian AJ Villago at his beautiful home in Forbes Park. The evening began with a solemn mass. What followed was a night filled with laughter, great food, music, and dancing. But fellowship is only half of who we are. On October 5, our commitment to service took center stage. Led by Disaster Response Chair Nikki Ramos and Cos Ron, our team traveled over 14 hours to Masbate. In partnership with RC Masbate, we distributed 500 mats and blankets to families in Barangay Pina, Marbuhan, helping communities slowly rebuild and recover following the devastation brought by Typhoon Opong. That same day, October 5, our athletic spirit was also on display. The RC Makati Strikers concluded their participation in the District 3830 bowling tournament after 3 Sundays of competition. The team proudly secured a second runner-up finish in the Class B division, showcasing not only skill and sportsmanship, but the unity and enthusiasm of our members. Just a few days later, on October 9, our club hosted the first leg of the Governor's Cup in support of District Governor Reggie Nolido. 82 golfers gathered for a day of friendly competition, fellowship, and fun under clear, sunny skies. Disasters continued throughout the month, including a major earthquake in northern Cebu. On October 12, we partnered with RC Cebu for a relief mission in Tabogon, Cebu. The following day, October 13, we joined Sun Savings Bank through Paquito Dizon for relief efforts in Bogo City, Cebu. For both missions, RC Makati provided 50 water filters, ensuring affected families had access to safe and clean drinking water. On October 16, we celebrated excellence beyond service as immediate past President Keith Harrison flew to Cebu, not for a project this time, but to receive RC Makati's award for first place net increase in membership under the 100-member club growth category for Rotary Year 2024-2025. On October 17, we joined the graduation of 12 learners from the Hilot 101 training program in Pasay. And later, on October 31, we celebrated the completion of Hilot 102, equipping participants with valuable skills to build sustainable livelihoods. On October 18, our TRF donors attended the Donor Luncheon of Gratitude with past Rotary International President Holger Knack as guest of honor. RC Makati also presented its Dual-Tech Global Grant, reinforcing our support for education and workforce development. On October 21, the Rotary Ants once again came together for their monthly fellowship, this time hosted by Ants Camille Macachar and Angela Garcia. It was another inspiring afternoon of learning, bonding, and shared sisterhood. On October 23, Directors Paulo Turno and CB Revilla represented the club in the turnover of 6 air conditioning units to South Daang Hari Elementary School, a joint project with RC Makati San Lorenzo. The very next day, October 24, we marked World Polio Day by hosting the District 3830 Oktoberfest, an unforgettable night attended by over 250 Rotarians and friends, all coming together in the spirit of camaraderie and to support the End Polio campaign. On October 25, we continued a beloved annual tradition as we hosted a Halloween party for the children of Guadalupe Viejo in partnership with Prodigious Philippines, led by First Lady Sue Ann Nolido, who also celebrated her birthday that day. And on October 26, we gathered at Luneta Park for the launch of the second year of Sunday Food and Book sa Luneta in partnership with Bolanday. This year, we also introduced Art Sunday, led by Angela Garcia and featuring Julian Harrison as the first guest artist, nurturing creativity and learning for young families in the park. On October 27, our medical mission program continued with a cancer screening mission in partnership with RC Grace Park, held at Barangay Maypaho in Caloocan City, extending preventive healthcare to those who need it most. On October 28, we joined RC Downtown Calapan as they celebrated their 44th induction in Calapan City and explored opportunities for a future brotherhood partnership. Throughout the month, our AI Academy continued to thrive. As our first cohort progresses through the program, we have already seen inspiring transformation, learning, and empowerment among the students, fueling innovation and future-ready skills in our community. From fellowship and sportsmanship to disaster relief, healthcare, education, community development, and innovation, October was a powerful testament to what it means to be a Rotarian. We served, we celebrated, we learned, we uplifted. This was our October. Together, we unite for good.
Okay, thank you. Thank you to all the directors and committee chairmen for making all of those possible. As you know, we continued our cluster format this Rotary year, strengthening camaraderie and friendly competition. We refined our point system to include not only luncheon meetings, but also socials and club-wide activities, ensuring broader participation. As of the end of October, Cluster Casterly Rock, led by Director Roger and President nominee Chris, is slightly ahead with 84 points. Followed closely by Dragonstone, under Director Michael and President-elect Howie with 81 points. It's a tight race, and November will be a pivotal month, so keep it up, guys. At our Christmas party, we will hold our mid-year awards with 50,000 going to the leading cluster and 30,000 to the runner-up to support fellowship initiatives. Let's continue the momentum, keep showing up, stay concerned, and rally your teams. This afternoon, we formalize our partnership with the Rotary Homes Foundation through the signing of a MOA for the additional 12 housing units in Muntinlupa. This completes the 40 homes fully funded by our club, and construction is already underway with turnover expected early next year. Philip? Early next year. Beyond the homes, we will now begin organizing the beneficiary families into a Rotary Community Corps to help empower the community with livelihood and long-term support programs. We are nearing the end of the nomination period for the Paeng Hechanova Youth Leadership Awards, or FILA, closing on November 14. We currently have 49 nominations, close to last year's figure, though we are aiming to surpass it. If you know an exceptional young leader making a meaningful impact, please reach out and we will help facilitate their nomination. As I'm sure you know, the first prize, the cash prizes are pretty substantial this year, with the first prize, I believe, winning 500,000. After nominations close, our district coordinators will begin judging from November 17 to 27. I'd like to thank our assigned club coordinators for stepping up to support this important phase. Your time and service ensure we recognize the very best youth leadership in the country. Please also save the date for the FILA Gala Night on January 30, 2026 at the Manila Polo Club. As part of our 60th year, we are exploring a collaboration with Ibarra Manila to create a limited edition 60th anniversary watch. Only 60 pieces will be produced, and the cost will be approximately between 25 to 30,000. We are finalizing it yet. We already have 12 confirmed interested members, and we are now completing a reservation list to determine feasibility. Kindly inform us by November 6th if you'd like to reserve a unit. This weekend, we will be holding our medical caravan in the north this November 8 to 10 in Vigan, Narvacan, and Baguio. If you will be in the area, we invite you to join us and take part in bringing much needed medical services to those communities. We're leaving this weekend. I know a lot of Rotarians are joining us. Director Michael Su, Ambassador Melvin, Patrick Parungao. So whoever else wants to join us, please. Now this will be from Friday, coming back on Monday. So we go to Ilocos and Baguio. There's also going to be a travel to Zamboanga for 6 dorm project to do an ocular sometime this month in Talon Talon Elementary School in Zamboanga. Talon Talon High School. And we've dovetailed this with another water project that we're doing in collaboration with Rotary Club of Zamboanga West, right? It's West, Rotary of Zamboanga West. And next week, please note that we will not have a regular Tuesday luncheon meeting. Instead, we will have a joint meeting with RC Makati West. Their president is here, Dino Dumatol. And Rotary Club of Manila, headed by Roel on November 13, Thursday at Tusitani. The guest speaker will be Senator Bam Aquino. So please, give your names because I'm sure they want a number. So before I close, I'm very pleased to share another piece of good news. Our RC Makati AI Academy has been shortlisted as one of the finalists for the top community service project at the Rotary Genting Zone Institute. A voting link has been shared in our Viber group. I invite everyone to support our entry by sharing the link with your friends and clicking the thumbs up to cast your vote. Let's rally behind this innovative project and show the region what Rotary Makati can do. Maraming salamat po ulit and thank you for your support.
Okay. Thank you, President Eddie. Another busy and very successful month. No? 8 more to go. Okay, now let's proceed to the highlight of this afternoon's meeting. And to introduce our guest speaker, please welcome DS and future Governor Louis Asioche.
Alam mo, PNPs na naiintig tuloy si past President Philip Nazareno dyan sa mga pinagsasabi mo. Hi, good afternoon. Our guest speaker is currently the Executive Vice President and Chief Operating Officer of the Philippine Stock Exchange. And that is how we first met. He was the hearing officer in a compliance case involving a former client, and he struck me as someone who's fair, very competent, highly competent in fact, and a very objective presiding officer, ever courteous but very firm to litigants. He honed his legal skills in 2 of the largest law firms in the country, Sisip Salazar Hernandez and Gatmaitan, and the Accra Law before joining the PSE. Like our President nominee Chris here, our speaker leads the sustainability initiatives of the PSE, and he was invited to speak at the UN Climate Change Conference with the parties of the COP28 in Dubai, where he shared insights on how the capital markets can be an enabler for stakeholders to transition to a sustainable business towards achieving nationally determined contributions. He served as chair of the Capital Markets Development Committee of the Philippine Chamber of Commerce and Industry, or the PCCI. He is currently the president and chairman of the Philippine Fulbright Scholars Association, having been himself a Fulbright Scholar at the Emory University Business School in Atlanta, Georgia, USA. Roel is a teacher, a trainer, and an educator. He is a member of the Commercial Law Department of the Philippine Judicial Academy, or the PhilJA, and concurrently serves as Professorial Lecturer 1 in the PhilJA Corps of Professors, where he shares practitioners' perspectives on commercial laws in workshops and programs for members of the judiciary and lawyers in the Court of Appeals, the Supreme Court, and the Court of Tax Appeals. Ooh. He is likewise a professor of law at the Ateneo Law School and a professorial lecturer at the University of the Philippines Virata School of Business. He is a regular speaker in the mandatory continuing legal education of lawyers, or the MCLE, and is a bar review programs and of the bar review programs at the Ateneo Law School. Roel is an adjunct faculty at the Asian Institute of Management, or AIM, for its MBA and Masters in International Business Law, or MIBL. Roel here is a certified public accountant and a lawyer, having earned his accountancy degree, magna cum laude, from the premier educational institution in the country, which is the University of the Philippines. After which he earned his Juris Doctor's degree, second honors from the Ateneo Law School. These are degrees which can qualify him to be the head of the Commission on Audit. Right, Roel? COA? In my opinion. Roel ranked fourth in the 1999 National Bar Exams, which registered the lowest national passing rate in the history of the bar exams at 16.59%. And I thought ours in 1992 was the lowest, where my compatriots, the chairman of the SEC, Emil Aquino, and past president Peter Manzano were my batchmates. And we also had one of the lowest bar exam results. The second time I met our guest speaker was when he joined as one of the advisors of the PNP Makati Central Police Station as member of the Station Advisory Group. He has expressed his desire to lead the legal clinic in our upcoming community service at the PNP Makati, and this will be coming 2 weekends from now on November 16. And that is why I also saw in him, he is a potential member of our club because he too has a heart for service. Our guest speaker, Attorney Roel Refran.
Good afternoon. Thank you, Attorney Louis, for the kind introductions. It's my first time to join Rotarians. And I was telling the Eddie beside me, and I was saying, there's a lot of things that you're accomplishing. I guess the ripple effect is something that's felt not just between among the members, but really the communities you serve. So that when we look at sustainability as a program, whether at the national level or at the micro level, it's really the inside looking out approach, no? In terms of impact that matters more than the outside looking in. Because for the financial markets, we're more looking at what's the impact of the outside insofar as your financial materiality for the bottom line. But I guess your Rotary activities is really living what's called a double materiality. The impact materiality is really what the legacy will be and what the impact for not just the 1 degree away communities, but even 2-3 degrees away. So I really am very pleased and very humbled to hear that there are institutions like yourselves doing this. Okay, so I was asked to just share a couple of insights on probably something that is very relevant nowadays. No? But when this was discussed by si Chris with me, it was not very relevant. But relevant in the sense that 2025 was shown to be a very volatile and a year that's filled with a lot of uncertainties. No? This could have been a statement that we can make early this year, January, as we approach the year. We're all bracing for a lot of uncertainties. And third quarter, going to the fourth quarter, it's still the same story, right? Uncertainties magnified, not just on the local scale, but on a regional, if not a global scale. And I have a presentation slide deck for your reference that we could flash on screen. I think in email na sa'yo, Ron. So it's really walking us through the risk landscape globally. And then before we go into the current landscape, for purposes of understanding how it impacts debt capital markets and the equity capital markets. I guess when you read Bloomberg yesterday, I think that was headline news, and they were saying that we have been, I would say over a 10-year period, down by 20%, no? Because if you look at 2015 compared to today, yesterday we closed in terms of the index 5828, and 2015 we were during the President Pinoy's time. We were just recently upgraded to investment grade rating. If you remember that, sometime 2014. No? That's a highlight because when we got upgraded, there was a lot of investments that flowed in on expectations that that an emerging economy, we're still emerging, but the expectation was that over time, that the numbers, the macros, would probably incentivize a lot of foreign investors to come in, right? So that was the backdrop 2015. So today there's a lot more uncertainties and risks that we will now probably see in the first slide. No? I wanted to highlight, the first slide is about the risks, structural, as well as the macro or the political risks that may be very relevant. No? It's a risk listing with respect to not just that particular risk, but the trend of that risk. Now, that's what's important about that slide. It shows, for example, geopolitical risks that are very high. And for example, the tariff risks as well. The Liberation Day tariff of President Trump, also very high. And to the point that you might say it's worsening, depends on which side of the story you're in. Then that would probably be a risk that you have to properly manage. And the tariff risk, a lot of corporates would probably manage that by relocating their production to those jurisdictions where they're able to still be competitive in terms of the pricing. Otherwise, then that's a drag in terms of your bottom line. So first slide. We'll go through that. Next, please. The global and regional economic risks. So this is what I was referring to in terms of top global risks. This is from S&P's Global Credit Conditions for 2025 as of the last quarter. So the red ones highlight very high with respect to the tariffs that do hurt the supply chain in terms of maybe predictability. When this was announced back in April by President Trump, we were saying that there were a lot of front-loaded orders by the manufacturers. And so that there would be a lag between the time that the tariffs should have taken effect up to the time that the GDP of the US will feel that, right? And that's supposed to be quarter 3 or quarter 4 because of the long cycle to order. And they do take time before they are shipped. And so it's still very high because even as of, for example, October the 1st was when there was 100% tariff on branded medicines that are not manufactured within the US, right? And the pharma industry were shocked with the effectivity of that. In one fell swoop, it's now 100% tariff for branded medicines, unless you are located in the US and that's where your manufacturing facilities are. So it does have a ripple effect across different industries. With respect to the second red item there, geopolitical tensions, this has been probably multi-years worsening. If you look at beside the red is a gray box which says it's worsening. And this is really the story. And I'd like to say, for example, if you look at France, if you look at Japan, you look at the political dimensions there. For example, in Japan, they have now the first woman prime minister, right? But you see that there's a lot of coalitions that they needed to collaborate with for them to be able to come up with that candidate. You know? Because it's, I think the challenge now is that there's a lot of voters, including in Japan, where they are also expressing their sentiments via the political leaders they choose, right? And that control over the diet, control over the legislature is very important if you are in the executive department to implement the reforms that you have. Japan right now, in terms of its debt to GDP, who would say they are 100% debt to GDP. For example, the Philippines is right around 60-61% debt to GDP. I thought that was already high because back in 2000, during the time of President GMA, we were hovering around 45 thereabouts, so debt to GDP. Now we're doing around 60-62%. No? So because of COVID, we borrowed a lot. And so GDP numbers is 24-25 trillion. So your debt is right around 60%. Japan is the highest, 265% of their GDP is debt, right? They keep on borrowing and borrowing. And Japan, for the longest time, has been probably, if you look at the inflation numbers, negative inflation, right? Because prices never go up until this year when there's at least signs of inflation, right? And that economy is a very strong economy, but now there's an alignment between the market and the underlying economy in Japan. Everyone's talking about US, go long on US if you look at trading strategy, but also Japan, right? Outside of China, go long Japan, outside of India, the outperformers, right? So Japan is at the moment similar to where India was, where it had its pivot moment 4 or 5 years ago, because India is really a very strong economy, and that reflects in their market performance, right? So Japan is an interesting case study. Yes, it's experiencing currency issues with respect to the value of the yen. People are also expressing surprise because they're not used to it. That now they realize that their yen does not buy the same amount of goods because of inflation. They're not experiencing that. They even had negative interest rate for the longest time because the government is encouraging them to spend, and they're not spending, right? So that's Japan. France is also interesting because if you look at the dynamics of France, debt to GDP would be around 110, 115%. So much higher than the Philippines, right? But if you look at also the conservatives or the extremists, both in France as well as in Japan, you probably see that the policy is also shifting, right? Away from the traditional, and now a lot of voters also are probably going into new alternative leaders for purposes of running their economy, right? But I translate that now to the debt capital markets for those countries, or the equity capital markets, right? If you look at the rates at which the French government or the Japanese government can borrow, it's still very competitive rates, no? It's in terms of the political dimensions, it seems to me that the market is not yet pricing that in with respect to the ability to borrow at a very good discount rate, right? Because that's how you measure the confidence with respect to a jurisdiction. Can it borrow in the regional or the global markets at a rate, maybe long-term rate, 10 years to pay, right? It's an IOU via the government securities, US dollar denominated, at a rate that's still very competitive vis-a-vis developed markets. Because, for example, the Philippines is an emerging market, right? And that's the question, no? Because in terms of confidence, that's where the rubber meets the road. Are you able to borrow? Or are people pricing in sovereign risk? Are people pricing in other risk factors so that they will only lend to you, provided you give them higher premium, which is higher coupon rate, higher interest rate? Okay, those are just thoughts that we should also observe with respect to the global risks. And if you go to APAC, there are also red or dark red items on global trade, because tariffs are indeed the headwinds. What we want from a risk perspective are tailwinds, right? That they're supposed to accelerate progress. But tariffs being where they are right now, the trade flows and supply chains are also disrupted heavily, right? With respect to the world order before, where there was global trade, the idea before was that, the lesser tariffs, the better. But nowadays, I guess that model has been put on its head, in the sense that I think yesterday President Trump was saying that that was the greatest event in 2025, the fact that they were able to go hard on the tariffs. And he was being interviewed yesterday and was saying that, and look at our economy, right? The GDP numbers are better than expected, right? For Q3. Analysts thought that it would slow down because of the tariffs, but it was better than expected. Although if you look at the jobs report in the US, it's right around 4.1, 4.2%. Very, very low. That unemployment rate is expected to also stabilize. Although if you look at the jobs report on a monthly basis for the US, for the past 3 months, they've only been creating 37,000 jobs. Very dismal And they're expecting normally on a monthly basis 150, 200,000 non-farm jobs. Right? So you see that there are different levers with respect to the US economy because people always say go long US, right? Because that's where the AI boom is. Go long US. That sector is very liquid, right? They're both the debt capital markets. That's the gold standard. If you want to trade securities, so go there for the debt capital markets. No, but of course, different investors would have their own preferences. Although if you look at MSCI for the year, emerging markets in general, that cluster has been giving north of 20, 25%, as an emerging market asset class. Right? It's giving North America, the US, a good challenge in you look at asset flows. Okay. China's economy is also a high risk, although now I think it's on a upward trend. It's on a rebound. It did slow down. Used to be double-digit GDP growth. Right? I never thought I would see the day when China would just grow by single digits, but it's already happened. Because for the longest time, they were registering double-digit economic growth. Other factors in APAC, the repricing of assets with respect to financing could intensify market volatility, disrupting financing access. So a big assumption here is that what's happening around APAC, the market has a mind of its own and it's pricing it into decisions to buy or sell. Right? That may or might not be true, as I said, if you look at sovereigns like France or Japan with macro numbers that doesn't seem to be very comforting, right? But you see that the domestic support for Japan is that more than 50% of their debt is held by the big institutions in Japan, right? And so there's still the confidence booster there that, whatever happens, we will support the economy because it's the domestic institutionals who actually lend money to the government of Japan through the treasury auction process. Okay, so financing with respect to assets, it could be that you will correlate that to what's happening in that jurisdiction, and that is a fair assumption. But sometimes markets are not able to efficiently price the risks, right? Because not all markets are efficient. Okay, and a sign of efficiency is the way the prices move when good or bad developments happen. Okay, so and finally, geopolitics, the lower portion, structural risks. There are three structural risks there: geopolitics, climate change, and technology. High for geopolitics, climate change is elevated and worsening, and technology with respect to accelerating advancement and mounting cyber attacks to disrupt business operations. I guess I just highlight when you look at technology, this is what we in the risk business call it novel risks. Because, for example, when AWS had a shutdown for a couple of minutes last week, right? Disruptions like that are not novel per se, but because of the fact that AWS is now the backbone of global technology with their cloud services, right? Not to mention the other services that they provide, it does create a different systemic risk. And that is what's novel about what happened to the disruption of AWS. And these novelty items also will get everyone not to be proactive because we can only react because these risks you never foresaw could not have been factored in your risk management, right? So I guess that's the lay of the land for 2025. Uncertainty still looms very much so, not just at the start of the year, but even as we go to the fourth quarter of this year, right? So next slide, please. Philippine GDP, where were we first quarter? We were at 5.4% year on year. Expectations were a little bit higher, I think 5.8. So around 0.4%. We missed the target, but 5.5 for second quarter is still good, no? The consensus as we look at, I think the next GDP numbers will be November the 7th, Monday, right? The consensus is that we will probably go anywhere from 5.2 to 5.3, just based on the analyst estimate, right? Worst case is around 4.8, 4.9 because of what's happening. That the government is underspending now because of the political and the corruption issues that are now taking center stage. So when the government underspends, GDP will slow down. So the worst case that analysts are saying is that we will hit 4.8, 4.9%, which is which is to me the resistance level is around 5%. No, you want to be afloat more than 5%. Okay, so that's something that we will look forward to. But in terms of the growth forecast for the entire year, we are expected on a revised version compared to the original start of year expectations, anywhere from 4.7% to 5.6% annualized. Okay, so normally for the fourth quarter, there's what you call the Santa Claus rally, because people spend a lot in keeping with the season, as well as the net unilateral transfers or the OFW funds come in. And that should be around 35 billion US dollars for the year, right? That's our projections. So if you look at these numbers, we're not doing bad, right? We're still very respectable, more than 5%, 5.4, 5.5. And on an annual basis, best case will be around 5.6. Okay, next slide, please. So current landscape. This is something that I thought I'd share with you with respect to bond markets. I think the thesis is when you look at bond markets in an economy, right? The indicator of credibility and confidence will be if you correlate that with a developing market like the US, right? Because the expectation is the riskier the market, the higher the bond, the rate, right? The more stable the market, the lower the rate because it's not as risky, right? But for the past more than 4 years, there has been a compression of the difference between the federal rate in the US, which is the reverse repurchase rate. They use the RRP. And the Philippines, when you look at the benchmark rate, right? In 2021, it was by more than 300 basis points, no? More than 3%. And as we entered the pandemic, it compressed 2022, 23. And the new normal is right now, it's now from 4.4 in the Philippines and in the US rather, that's the light blue, is that the US, to 5.9. 5.9 here is the 10-year B-val rate. We use the Bloomberg valuation. Or some of you may remember we used to have R1, R2. We've ditched that. We're already using Bloomberg valuation, right? So 5.9, 10 years, government bonds, right? If you borrow with shorter tenors, maybe you can do around 4.8, 4.9%. It's riskier 10 years compared to the US at 4.4. So you see that it has compressed, right? That's something that will then, I would say, incentivize if the government still wants to finance its expenditures outside of taxes, then this is something that would also support the government level of financing through the Bureau of the Treasury, right? I was surprised because this was, I think, Monday. They had a full subscription for 25 billion pesos worth of government treasury bills less than a year. There was 91, 182, and 364 days, no? Very healthy demand from the corporates, right? And for the first time in October, I saw that they've never done this, the Bureau of the Treasury. What they did was they reissued short-dated instruments. Normally, you reissue long-dated because you want more liquidity in the government security. What they did was they reissued the 364-day Treasury bill to get more liquidity. And it was still snapped up by a lot of the investors. No? The investors here will be your government dealers, the eligible dealers, who will then transmit through the private wealth and through all of you those opportunities, right? So the key interest rate in the US, they have been on a dovish sentiment. It's been going down, down, down. As in fact, last week, Wednesday, they cut it by 25 basis points more. So it's at 3.75 to 4%, right? We are at 4.75% after the October surprise cut by the central bank also. So if you look at the lower right side, you could see there that the spread or the difference has been really going down, US versus the Philippines, okay? Will it ever be at par? I don't think it will be at par because of the difference. So there will always be that risk premium. But the idea here is that, you know, the ability to borrow is also incentivized by the low borrowing cost. Okay, next slide, please. Other socioeconomic factors. The graph upper right, which is with the yellow highlight. The yellow stands for the middle income sector of our economy. And the last that was released last month is actually very dated. It's 2021 numbers, right? I was thinking that the idea was that the middle class in the Philippines defined to have a monthly family income range of anywhere from 24,000 to 144,000 pesos. I was of the impression that that's actually expanding. But based on the latest census, this is again 2021 numbers, it's actually been at around less than 40%, right? Back in 2018, that was at 43%. So the expectation was that it should widen, but it's not widening. Of course, the low income has instead been widening, right, to just below 60%. And the high income earners are also being compressed out by the low income earners. And it's some food for thought in the sense that the idea is that you want to expand the middle income because this is the consumption, the consumers who would actually contribute to economic consumption, right? And another point, lower left, you look at how much in terms of US dollars we have per capita, right? The Philippines GDP per capita is the lowest at 3,900 US dollars, right? For your reference, Vietnam is at 4,007. And 2 weeks ago, the government issued a very bold program and they said that we will become in a year 5,500 US dollars. And this is our program, no? So very bold ambition from the Vietnamese government for them to reach 5,500, right? Because if you look at the GDP per capita where we are right now, you're still in the lower middle income economy status, right? You want to be in the higher middle income economy status. And that was also pronounced already by the Department of Finance, that that's also the objective, to put a lot more in terms of per capita income in the hands of the Filipinos. No? Singapore, of course, stops at 90,000 US dollars per capita. Of course, Singaporeans are maybe what, just over 4 million, thereabouts. No? Okay. So the Philippines remains a lower middle income country, narrowly missing the World Bank's threshold for middle income status. Okay. That's the economic realities on the ground. Next slide, please. There's a lot going on here, but I guess this is what Bloomberg reported yesterday. Over a 10-year period, you would see that 6,900 or right around 7,000 points, right? And we're doing 5,008. So that's 20% drop over a 10-year period. We were at our peak during the time of, this was January of 2018. I remember we breached the 9,000 level, right? So what's the story here? The story is a question of, is it priced properly when you look at these numbers? So this is the index in the equities market, right? We could also go later on in the debt capital market, because that's the bigger valuation compared to the equities market, no? In terms of market capitalization, in terms of the trading. But first off, this is the one that gets the headline news, right? The equity capital markets. They say the more interesting one. We are trading at around less than 12 times earnings. So is that cheap? Is that expensive? That's very cheap. If you look at a lot of high value stocks in the index, they're also underpriced, right? Very, very low multiples. Some being discounted by more than 20%. These are the brands that are, front and center when you look at investment, okay? So, however, if you look at the mid-cap index, we do have a mid-cap index outside of the main benchmark. These are those that are not part of the creme de la creme from a market cap, liquidity, and public ownership, but are next in line, right? You would see that year to date, it has been registering 15%. This is the mid-cap, right? We also have what's called the dividend yield index. These are the high dividend paying companies outside of your real estate investment trust, outside of the others that are by regulation law required to give dividends, no? On an annual basis, the dividend yield index should give you around 6 to 7% returns, 6 to 7% on an annual basis, right? So those two, for example, would give a lot of asset managers opportunity to come up with products, right? Via, let's say, mutual funds or via unit investment trust funds that would then be used because the funds, the cash that's in the hands of the Filipinos would need to be deployed, right? Otherwise, it's a wasting asset. It's not earning any income. So the mid-cap index from the time we launched it in 2022, right? All the way up to November the 3rd, right? You would see that the performance of the mid-cap as well as the other index I mentioned, dividend yield or DIVY, we call it, has actually outperformed the main benchmark index, right? So the benchmark index is at very low levels. I think during the pandemic, we were hit. This was 2020, around March, April, right? That was the lowest. There was a rebound since then, but this is very low over a 10-year period, right? Cheap, but the next question is, why are people not buying? It's cheap at 12 times earnings. If you go, for example, to Singapore, that probably would be around 18, 19 times earnings. The developed markets will be more than 20 times earnings. No? It's because probably the expectations on the risks are not as risky because this is an emerging market. With all the noise that's going around, they price in that risk factor and look beyond the other potential sources of income by way of returns. Okay, next slide, please. The annual growth rate is reflected in a table here. 10-year growth rate, minus 14.7%, compared to the 62.9% mid-cap 10-year growth rate, or the dividend yield, the DIVY 10-year growth is at 18.9%. Okay? And if you look at the market capitalization, it's you don't look at it in an absolute term. You look at it compared to the GDP, right? If the GDP is around 24, 25 trillion Philippine pesos, compare that to the 18.76 trillion that's in the equity markets, right? That would be market cap to GDP. Last year was around 90%. And for the second quarter, we're around 88%, right? So the higher, the better, if you look at the comparison of the market cap to GDP. But not too high because that shows an overheated market that is overly in terms of the pricing. There's a lot going on. Like in South Korea today, one stock was cautioned because year to date, it was already at 260% growth, such that the Korean Stock Exchange said this cannot be sustained. From January to today, you're growing 260%, right? And it's really the herd mentality that you see in markets where people just follow the big institutions. And that might not be the best recourse for them from a trading perspective. Okay, next slide, please. So that's the equity markets. Not a lot of excitement, but there's a lot of opportunities for those who may want to reallocate investment capital. In the fixed income space, if in the equity capital markets on a daily basis, as I said, we're low, less than around 100 million US dollars per day being traded. At its peak during COVID, we saw around more than 150 to 160 million US dollars. Now, that's low by any standards. In Philippine pesos, that's around 7 billion pesos today, right? If you look at the fixed income markets, the daily trading can go all the way up to more than 100 billion a day or more, right? If in the equity market, money that changes hands is just 7 billion. In the fixed income markets, which is the bigger market, you're probably looking at 90 billion a day, 100 plus a day, right? You have 50 billion days. That's very low already on average, right? And that's where the corporates go now for purposes of going and fundraising, right? However, if you look at the expectations for the rates next year, the consensus is that there will be further easing or rate cuts by the central bank in the Federal Reserve. The Federal Reserve has been through 2 rate cuts this year, the US. Expectations is that there will still be one within December, 3 for the year. That's not very normal, right? In the Philippines, the expectations as well, as we go to the second quarter, first and second, 2026, because if you're in the finance team of a listed company, you're looking beyond this year, right? That there will still be further rate cuts. So they're still awaiting those to be able to get the most by way of fundraising, because they'll be able to borrow at a lower cost of capital should the rate cuts indeed happen all the way to next year. But that being said, June of this year, Bank of the Philippine Islands issued what they call the CNAC bonds, which are along sustainability themes, inclusivity, nature, and growth. It's 40 billion pesos, not a jumbo offering, but still significant by any standards. Petron Corporation, July, issued fixed rate bonds maturing in 5 years, 2030, 7 years, 2032, and 10 years, 2035. The amount was 32 billion. And then BDO Unibank, the bond issuance also in July was at 115 billion. Right? That's significant. And this is for sustainability bonds that will mature in 2027. So the bond markets, this is also one of the thoughts that you may also think of when bond yields are going down because of rate cuts initiated by the monetary authorities, right? In terms of the bond prices, it has a opposing effect. Bond prices go up. Depending on your investment strategy, you may want to sell because what's in your books suddenly have appreciated because bond rates have gone down. So the present value of all the cash flows are now going up, right? But in relation to the equities market, when bond markets are behaving like that, you expect that the investor should also consider the equities market, right? Because the yields in the bond markets a while ago we saw for 10 years were probably doing 5.96%. That's probably after tax, that will also be less 20%, or your corporate, you'll probably, if there are tax incentives or tax treaties you can invoke if you're a foreign institution, right? In the equities market, for REITs, for example, or for the other high dividend payers, you could probably be more competitive when you look at the returns, right? But the difference being bonds are are so much less risky compared to equities, right? It's less risky to the point that even prior to the pandemic and during the pandemic, one of our listed companies, ASEM, which is in the renewable energy space, was able to issue fixed for life bonds. No, it's pioneering in the sense that the rates will never change for life. Normally, bonds have a maturity, but when I issue fixed for life, the expectation is that I will pay you for as long as you live, and I will never call on that bond. There will not be a redemption, right? So those are the deals that uplift the visibility of the Philippine bond market, right? And they fundraise that in Singapore. And that opens it up to a lot more opportunities. Although it's US dollar denominated, you also would like to consider hedging your FX risk because it's in US dollars. Okay? So these are some of the marquee deals in the fixed income market that we've seen for the current year. Next slide, please. So is the glass half empty or it's half full? Depends on what the future holds. On Friday, we have Maynila, the water utility company. In terms of the pickup from the public offer, you see that there's intense demand for the Maynila bonds, for the Maynila equities, no? Common shares. That will be listed on the 7th of November, this Friday, right? The price at which it was offered is at 15 pesos, right? With 6 cornerstone investors, including ADB, IFC, including the UK FCDO government, right? So that's something that hopefully will also wake up the activity in the market, right? Because it's in terms of the yields, in terms of the capex, in terms of the water, it's a first what's called green equity ever in ASEAN also. No? That additional labeling should also give it a better profile. And this is the Maynila common shares. Okay, that's one. What we're seeing also is that corporates are able to fundraise on a shorter period, whether that's overnight or whether that's shorter than a week. In case of Raslag, another renewable energy company, they fundraised 700 million pesos. It's not a lot, 700 million. But what's tricky here is that they had to execute in 2 days' time, right? In 2 days' time, and just 9 investors were able to fill in the 700 millions. In fact, there's a lot left over because a lot of investors wanted to partake more of these private placements via issuance of these are preference shares or preferred shares. They're not common, but they are normally with cumulative dividend rates for purposes of this. So this is RASLAG. One construction company also issued overnight, not overnight, but also along the same private placement is EEI. EEI Corporation also issued it. And the counterparty in that case was government entity Pag-ibig, HDMF, Home Development Mutual Fund, HDMF Pag-ibig, right? So you see that they're not doing a public offering immediately, but they need the funds. So what they do is they do what's called a private placement to take advantage of better pricing because it's easier to manage compared to a big public offering. Okay? So the public offerings may be a function also of companies saying that they want to see a pickup in the economy to also favor the valuation of their shares of stock. Now, there's a couple who have deferred, made publicly available their prospectus, but at the last moment they deferred. Han Hotels out of Pampanga, as well as I think one of the most awaited is the GCash IPO. But because of policy shifts from the government, there was a big revenue loss with respect to the gaming sector that were required to be spun off from the electronic wallet, the e-wallet company. So the story still continues. We're still looking forward to that company because of the private equity investors who really need to exit. It's driven by the PE fund that's co-invested in GCash. Okay? Does it need cash? Maybe not so much, but the private equity guys want to exit, right? Because that's a life cycle as well of the private equity fund. Next slide, please. Other options outside of private placements or IPOs, what we're seeing in ASEAN is that you may want to do a depositary receipt or a DR. For example, the shares will not be listed in your market because they are listed in the home market. If you want to be a host market, you can issue a derivative like a DR, right? Depositary receipt entitles you to the cash flows, although you're not holding on to the underlying asset, right? You may want an AI-driven stock listed in the US, and because you want to fundraise on an unsponsored basis, meaning it's not the issuer it's not the company, the AI company that will come up with this product. It's more the financial the asset managers. Normally, these are the big custodian banks or the big brokers that would issue this. We see a lot of this in Singapore, Thailand, and even I think in the works Indonesia. All right, so these are global, but we call them Philippine Depositary Receipt. Think about PLDT. PLDT has an ADR in the US, and PLDT is listed here, but they issue DRs there in the US. They call it ADR. This one is Philippine DRs, PDRs. Okay, we have some DRs for the GMA as well as ABS-CBN, the media sector. But this one is different because what you want here is for the Filipinos to be able to access the cash flows even if they don't own the underlying shares. Let's say Taiwan Semiconductor, TSMC, which is more than 1/3 of the Taiwan market, right? It's riding high off the heels of the AI story, right? Because everything and anything about AI seems to be very much the flavor for the year. Okay. The others are really ways to hedge, like derivatives and stock borrow. But the last one, lower right, is a financing tool outside of the PPP, Private Public Partnership Program of the government. And this is where the corporates may want to fundraise, but they don't want to issue common shares because they don't want to dilute their ownership, right? The sponsors may have their own reasons, but they want to tap the markets not by borrowing, but by issuing preferred shares. So before this was not possible, you have to offer your common. And then later on, you can have an option to also offer preferred shares, right? But they don't want the dilutive effect of issuing common to the public because the requirements at least 20% has to be offered to the public. So it dilutes the sponsors to the majority owners, right? So preferred shares only, normally these are non-voting. Preferred shares that are voting are quite expensive, right? So you want to issue non-voting preferred shares, right? So this is an option for them for, let's say, a power company or for an infra company to consider issuing preferred shares instead of maybe borrowing from the public in the bond markets. Okay? So these are options for capital raising that is now in the market. Next slide, please. Okay. All things considered, so you have the debt market that is now at all-time highs. We have never seen fundraising trading activity in the debt capital markets at these levels. Right? We just purchased a fixed income exchange this year. So we're now integrating it within our operations. Right? So I work closely with the team there because we want to introduce a lot more products in the debt capital markets. The big banks and the big institutions are the ones that participate in the debt capital markets. Retail, not so much. Is there a lot of upside? Yes, because there are still a lot of potential products in the debt capital markets that could be offered to get people to participate more in the debt capital markets, right? This is where the government securities are automatically traded, as well as the corporate bonds. Now, the story, however, in the equity capital markets, a bit more challenging, as we have shown a while ago in the slides, right? With daily traded value of $100 million US dollars, right? The principle always is that liquidity begets liquidity. Lack of liquidity is not a good thing, right? In terms of trading activities. It's a network effect, as well as the importance of having ready market makers, so that people who want to exit and there's no takers, these market makers will fill in the liquidity, right? That's a structural discussion that's ongoing, whether incorporating a market making structure would also buoy liquidity to levels that shouldn't be where they are right now. It's because we are lagging in terms of the liquidity at 100 million US dollars only, right? Another factor for consideration is the alternative investments landscape, not in the terms of private equity hedge fund, alternative, but in the gaming sector, right? Access by Filipinos to that, even if it's not outside now of the electronic wallet, is still very much accessible to Filipinos. No? Outside of cryptos and other cryptocurrencies, you'd be surprised that there's more than 6 million investors in cryptocurrencies, whereas in the stock market, there's right around 2 million only, right? So it's a risk profile for the Filipinos. These are just my closing thoughts. Did the fundamentals of the economy change with all the noise that's going around? Maybe not in terms of the macros, right? Fiscal management in terms of the cash management at 60% GDP, that's a debt. That's not too bad compared to the other economies, right? However, short-term expectations drive movements, right? Uncertainty keeps people on the wings. Therefore, people are holding on to safe assets. And 2025 is still not yet done, but a lot of uncertainties, a lot of headwinds. But that being said, businesses will still need to fundraise. Businesses will still need to pursue strategic projects. And I guess the idea there is that the local participation, especially when these businesses go to market, will actually spell success or maybe a lackluster fundraising for a lot of these corporates. No, the dry powder is the powder is very dry when you look at investable assets by the Filipinos, right? But the risk sentiments may be where the rubber meets the road here. If you're able to look at the risk, price it in on a medium long-term basis, then maybe you'll decide to let go or look beyond the short-term risks, the noise that's going around. But if you are fearful, then I think it is where we are right now, and that's where people are holding on to their investments and not really participating. Okay, so just some thoughts that I'd like to share with you this afternoon. Again, thank you very much for your time, and I hope it wasn't too dense. But thank you very much again to the Rotary Club Makati. Thank you.
All right, congratulations and thank you for that very interesting, informative and insightful presentation, Attorney Roel. And I was given the go signal to allow or to extend to 2:15. So we have 10 to 12 minutes for this question and answer. And let's keep it brief, starting with PP Junjun and then Architect KD Velasco.
Yeah. Attorney Refran, yeah, thank you for your talk. I have two questions for you, no? My first question is, what is your view of President Trump's pressure on Jerome Powell of the Fed to reduce the interest rates of the US? And how will that affect the US economy and the global economy? My second question is, you mentioned GDP as a measure of, how rich a country is. But why don't they use also an indicator of how evenly distributed this wealth is? Because even if a country has a high GDP, but if that's very unevenly distributed, then that country is practically not as quote unquote rich as it seems to be, right? So why don't they use that other measures as well, that measures how the wealth is distributed among the population? Thank you.
Thank you for your two questions. The first question is very important because that goes into the independence of the monetary authorities, right? And the market's now looking at that to be a negative for the US because of the pressure. They're now looking at the question on whether the Federal Reserve is still independent. Of course, structurally they are independent, but when there's an overhang over your job, right, that there are already names being floated and who will replace you as Federal Reserve Chair, right? Jay Powell is the current chair. That probably kind of puts a lot of burden on your shoulders, to make the right decisions. So, the analysts in the market question the independence, right? But Jerome Powell said in the last FOMC, the Federal Open Market Committee, that the independence aspect will be upheld. As in fact, expectations on a third rate cut in December, he said, are still on the balance. And he's saying that, you can't be too sure that we will cut interest rates, demonstrating that he is still independent, right? In short, he's signaling, the message signaling there is that, whatever the powers that be, President Trump say, we will stand our ground, whether we will cut or not on the third time. But the expectations that majority expect that there will still be a rate cut, more than 50%, polled by Bloomberg. So that's on the first question. The second question with respect to distribution, that's what the GDP per capita should be a proxy for. Of course, it's not a perfect metrics or perfect proxy at $3,900 US. A lot of the Filipinos are still in the lower income segment. For sure, they're not earning that on an annual basis, right? So I guess the best proxy there would probably be how much growth the middle income is experiencing through the years. Because with the growth, then they're able to then uplift the multiplier there would probably be more than 3-4 times because of the earnings capacity also benefiting everyone else in the family. We don't have yet, I would say, very promising numbers on that one. As in fact, I mentioned this last month, there's a 4-year lag on the data that they had for the growth on the low to the middle to the high income segment in the Philippines. But I guess that's something that we will see in terms of the consumption pattern. The fact that there's a lot more vehicles on the road because also financing opportunities is also a very good signal with respect to maybe uplifting the middle income, if not the upper lower income. So that's why in the end, it's still the GDP per capita that those are not PPP terms, by the way, the purchasing power parity terms. Those are real terms. Those are nominal terms. So maybe on a PPP basis, it could go up a little bit, right, to normalize the GDP per capita across markets.
Anyway, I checked, ChatGPT, and I asked whether there are other measures, and there actually are. No, there are. There's called the Gini index or a quantile. A quantile index which actually measures, those coefficients which measures how well how evenly distributed the GDP is among the population.
Okay.
Thank you.
All right. Thank you, PP Junjun and Architect KD.
Hi, attorney. My question is about companies who's planning to go public in the next 2 to 3 years. So with the moderating GDP growth, tighter PHUS bond spreads, and elevated growth and APAC risk, we've noticed that the major developers such as Ayala and SM, they're actually leaning towards issuing bonds. So instead of equity raises. So for a company with both recurring income and development upside, would it be more strategic in the next 2 to 3 years to go bond or REIT, that route first before an IPO, or the one that you mentioned earlier, which is issuing preferred shares? Or do you still see an advantage in listing early while the market is still adjusting?
Okay, Attorney Roel.
I guess the strategy will be driven by why you want to list. If you want to list because you feel that the valuation, your story or level supports a good valuation, like you become an 80% owner of a company that is so much more valuable after listing, because you lose the 20% because you share that with the public, but you become 80%. Normally, maybe price earnings, depending on the industry, maybe 20 times earnings. Price to book, also very high multiple. So you become 80% of that bigger valued company, right? So that the idea there is you probably want to also do intergenerational wealth transfer from the first, second, third generation. So going the IPO would probably be top of mind for you using those lens. But if your idea really is just to fundraise, so cost of capital, maybe the debt capital markets should be your first consideration, because the costs of capital there would be so much less compared to equity capital markets. No? But that's with its limits also, because I'm sure your debt to equity ratios would be limited depending on your existing covenants. So you also don't want to be too close to your debt equity levels. You then want to probably take a look at preferred shares, because it's like debt, but it's not debt, right? So it doesn't eat up on your debt equity levels based on your existing loan agreements. You want to maintain those levels. So, but outside of that, I guess once you're already listed on the equity side, you could still go to the bond markets back and forth, and that also is one of the pluses, because the banks would also want to lend more to you outside of the public offering, because then you're more transparent and all your data is now accessible to the public, not just the banks, but to the public. So it does present a better problem, right? Before you would line up to your friendly neighborhood bank, but this time around, after your IPO, they're the ones that would want to also offer you maybe not just working capital lines, but maybe other products, no? Anywhere from 3 to 5 lines, and I've heard that from our recent IPO companies.
Okay, I think we can accommodate one more short question. Yes.
Hi, Attorney Roel. Thank you for that insightful market updates. So my question to you is coming from a local perspective. Here in the Philippines, in a country where corruption and misinformation sometimes distort financial mindset, how can an institutions like PSE and professionals like us can work together to promote a culture of integrity in wealth building?
Wealth building, I guess important consideration there is to also educate the ones who would like to invest, right? So it's one thing to tell them that in the markets there's always a risk reward payoff, right? There's no such thing as a surefire income. Of course, if you look at the bond markets, that's contracted cash flows, right? That you're sure to get that interest income, subject to credit risk or default risk, but that's managed already. But if you want to be more speculative, you may, outside of mutual funds or ETF, want to take a look at opportunities, let's say in the listed equity space. There's also what's called private debt now being offered by big institutional investors. Private debt, they're not banks, but they lend at very, very good rates to them, which is high rates. No? So that asset class is also increasing now. It's called private debt, because on the public debt side, or those that are publicly offered, you go to our market. Right? So I think we can collaborate with we really engage with a lot of groups and institutions. We haven't had yet for the wealth managers, because wealth management should interface with the capital markets on the debt equity side more than probably just looking at the asset managements out there, the mutual funds or the UITFs, just to give a lot more options. So there's a lot of information outside of what you read that maybe can be shared also to your stakeholders. We can come up with a joint program as a pilot. No? Happy to discuss that further.
Thank you, Attorney.
All right. So thank you so much for accommodating the questions from the floor, Attorney Roel. We have run out of time, so we'll proceed immediately to our the next part, which is the response and adjournment by President Eddie.
Well, Attorney Roel, thank you very much for spending the afternoon with us, giving us your insights and perspectives on the capital markets, especially with the headwinds we're experiencing right now, and the possible avenues or best avenues for raising capital investments. No? So on behalf of the club, as a small token, we'd like to give you this certificate. It's actually a reef bud project we have in Narvacan, Ilocos Sur. So a reef bud will be planted with your name on it. Okay? So there's a environmental, obviously, aspect to it. And when you're not so busy tackling capital market challenges, enjoy a bottle of wine with your wife in the evening. Maraming salamat and thank you. Raffle, di ba?
Right?
Okay.
We have a
Well,
raffle.
I call this
Okay,
this
go ahead,
meeting is adjourned.
President.
But wait, we have a raffle for a bottle of scotch, I think.
Okay, presence is required, so please stay put, brother Rotarians.
Okay, this is the bottle for raffle.
Okay, and the winner is
Ala, ayun nyo yata ibigay eh.
Okay, here we go.
Okay.
Nako, overtime na tayo, Richard. Here we go, here we go.
Okay.
Okay. And the winner,
Ruleta. Okay.
Okay.
Paulo.
Alright, we have Director Paulo Turno.
Okay. Congrats, bro.
Congratulations. Ayan. Niloloko niyo si Director Paulo, ha?